What is up, traders? Hope everybody's doing well. Today is going to be kind of a different video. Today I'm going to be going over a simple and easy, straightforward strategy that you can apply to your trading to prove that it's really not about the trading model. You just need a trading model that is as simple and as straightforward as can be, and it really is about your psychology and your mental. So what I'm going to be teaching here today is basically about 70 to 80% of what I personally trade. Just what the other 20% is just more in-depth stuff that you don't really necessarily need. So the whole point of this is to make it as simple and as straightforward as can be for you to apply to your trading strategy. So let's get straight into it. What you'll need is simply 4 things that are very simple to look for and very systematic and repetitive, and this strategy will repeat at least once every single day. Okay, what you're going to be looking for is a sweep of liquidity. If you don't know what liquidity is, feel free to watch my YouTube mentorship here on in a playlist that I've posted. I posted liquidity. I've talked about it. You can go and watch that, but I would assume that you know what liquidity is. So let's assume you have this kind of structure, right? A form of liquidity in terms of buy side right here and sell side right here. Okay, so you have sell side liquidity and buy side liquidity. Okay, sell side liquidity in the form of equal lows, buy side liquidity in the form of equal highs. Okay, let's do this to make it a bit easier, like so. Get rid of that one. Let's do this. Okay, so what I'm looking for in this trading model is to see a manipulation, a fake out, a fake move to some sort of liquidity, whether that's buy side or sell side, and then for me to look to target the opposing liquidity. Okay, so you're basically trading a reversal, right? In this case, I would wait for a manipulation, which is basically a sweep of liquidity, a grab of liquidity, a fake move, and I would look to see price go and target the opposing liquidity. So let's say assume that we have this kind of market structure. We go up and we sweep the buy side liquidity right here. So we swept liquidity in the form of equal highs. Now I'm looking to see price reverse and target the opposing liquidity. Now this sweep of liquidity should happen on a higher time frame. So you would have generally to be more A plus, like a more A plus setup. You want to see this form of liquidity to be a higher time frame liquidity sweep. So anything above an hour and up, I would consider a higher time frame. You would want to see equal tops on a 1 hour, a 4 hour, a daily chart, something like that, in a form of liquidity to be swept. And then on the lower time frame, you would want to see price show signs that it wants to continue lower. Okay, for you to sweep the sell side lower. So first step is see a higher time frame liquidity sweep. I'm going to go over this on a live example in a bit to make it more apparent and more easy to learn. But you want to see a sweep of a higher time frame liquidity, and then on the lower time frame, you want to see a continuation, or a sign for price to reverse and now want to push lower. What is that sign? A break of structure to the downside. So we have structure here. We have high, low, high, low, high. This is the low. You want to see a break of structure right there. Okay. Once you have a break of structure, so I'm going to mark that as a BOS, break of structure on the lower time frame. So we zoomed in now to the 1 minute time frame, for example, with a 5 minute, whatever you feel comfortable with. I would say 1 minute, 5 minute, any break of structure there. And then you would want to enter. What do you want to enter off of? Whatever you feel comfortable. A order block, breaker block, fair value gap, inverse fair value gap, whatever. But to keep it simple, I would say for now, stick with a fair value gap. So you would look for a fair value gap that happened during that move. You would place your order right at it, stop loss, put it above structure, and then you would simply want to target the opposing liquidity. So first step, higher time frame liquidity sweep. Second step, break of structure to the opposite direction. Third step, look for a PDRA, fair value gap, order block, breaker block, whatever, to enter off of. fourth and final step. You want all this to happen within time. What do I mean by this? There is certain times in the day where it's higher probability for you to trade. These times are called macros. If you don't know what a macro is, I've posted it for free here on YouTube in my mentorship in a playlist, so go watch that. But I would assume if you trade ICT, you know what a macro is. It's basically a time of day where price spools, picks up the pace, and goes to where it wants to go in terms of liquidity sweeps. Those macros are 10 minutes before and after each hour. So 10 minutes before each hour beginning and 10 minutes after each hour's start. So the macros that I would generally consider trading are the 2 a.m. macros, so 9:50 to 10:10 macro, the 10:50, 11:10 macro, and then the PM macro, which is 1:50 to 2:10 macro. If you can trade or find a setup in any of those macros, also I would add maybe one more macro, which would be, if you would like, also the 11:50. I like this macro as well, to 12:10 macro. It's basically the first and final 10 minutes of every hour. Every hour has a macro, but some macros are better. Generally, these are the best macros of the day. If you can find this kind of setup to happen in any of these macros, so just basically just wait for the time, right? It's literally just 10 minutes before and 10 minutes after each hour. Look for something like this, a sweep of higher time frame liquidity, breakout structure on the lower time frame, and then a retest into some sort of fair value gap or a block, breaker block, whatever you want to enter off of. Try to see that or find that happen during time, right? That's all you need, and then target opposing liquidity. That's it. 4 steps. Higher time frame liquidity sweep, breakout structure on the lower time frame, enter off of a PD array that you find easy to spot. For me, it's usually a fair value gap. And then the final step, the 4th step, is for that all to happen during time, for it to be that more or that higher of probability, right? Now I'm going to go through an example that happened today, right? Very simple. I'm not going to go back and show you and prove to you that this works. That's on you. Do your homework, go back and test it. But I'm going to show just one very simple example that happened in today's trading, or it was Wednesday's trading. That was pretty nice. So if you go to the 15-minute time frame, or the 1 hour even, we can notice here that we have a lot of trailing sell side liquidity. So we have this low, this low, this low. So in the form of liquidity, sell side liquidity, right? So you can mark that out, sell side liquidity, right? So we have a higher time frame liquidity right there in terms of sell side, and we have a higher time liquidity in terms of buy side. We have this high and this high, right? So this high and this high. Now I'm looking to see one of these swept for me to target the opposing. So if we drop down to the 1 minute, we can see the first one to be swept is the sell side one, right? So we come down, we see a sell side liquidity sweep right there. And now I'm waiting to see price to show me that it wants to reverse and go and target the opposing liquidity. I want to see that all happen during a specific time, which is a macro. So I'm going to mark out, we said the 9:50 to 10:10 macro. So 9:50, 10:10. I want to preferably see that kind of picture happen during this macro. Okay. What do we see here? High, low, high, low, high, low, high, low. And then here, we break structure right there. BOS. Okay. Higher time frame sweep of liquidity, lower time frame break of structure, all during time. And then now I'm looking to enter off a PD array. You could enter off of this breaker block. If you don't know what a breaker block is, I posted that also in my mentorship for free on YouTube. After we've closed above it right there, you could have entered, or you could have entered off of this fair value gap. Always include the volume balance if you have one right there. If you don't know what that is, also posted that on YouTube in my mentorship for free. Check that out. And then you could have entered off a Fibonacci gap, like so. Stop loss below the low, and then target opposing liquidity. You would have taken maybe some partials here because this is a quadruple top right there, very obvious, 1, 2, 3, 4. So right there, you could have taken some partials right there. This is a very obvious pool of buy side liquidity, right? I would suggest taking some partials there, right? Or maybe even closing your full position if it makes sense to you. But if not, you can take some partials there at 2.86R and then leave some to run to maybe some this high or the full buy side, which is right there, right? For a wonderful almost 10R trade right there. Okay. The point is, but for me, I would just normally just close here because I want something that is very confident. You don't always have to catch the entire move. Something like this is way more than enough for you to be profitable, and it's much easier, right? I would even suggest taking some partials at this high right here. Let me take this off right now. If you entered here, take some partials out at this high, and then take the rest off there and just call it a day. Just low-hanging fruit. You don't have to catch these home runners. These don't happen every single day, but these moves happen every single day, right? So this happens every single day. These don't happen every single day, okay? And it's not every single day that you're going to be able to catch something like that. So look to aim for something that is low-hanging fruit that occurs every single day. And from experience, I can tell you this happens every single day, almost every single day. So that's basically it. 4 things. Number 1, higher time frame liquidity sweep. Number 2, a breakout structure on the lower time frame. Number 3, something to look to enter off of, which is any PDR you feel comfortable with, right? Number 4, time, specific time, macros. That's it. All right. Hope you guys found this insightful. If you want pre and post session analysis that I post every single day on my Discord about NASDAQ, every single day before market open, I post my bias, my analysis, what I think is going to happen for price for NASDAQ. So for free on Discord. So if you want to join and see that, feel free to do so. Also, my free mentorship in terms of the videos is here on YouTube in a playlist. Almost done, almost fully posted. So if you want to watch a mentorship in terms of the videos that is ready and straightforward without too much talking, feel free to watch that. Also, I do have my private one-on-one mentorship. So if you're starting out or struggling with trading and you want kind of that one-on-one experience, I can help you. You can book your call down in the description, Calendly link. You can have a call with me and we will discuss it out, right? That's going to be it. Hope you guys found this insightful. Until next time, stay safe and happy trading.